Hi everyone, this is David Kosmeter. I am the creator of Timing Research, and this is our show for December 29th, 2014. We are going to be discussing the 66th weekly report from Timing Research. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports. I have a new, I actually set up a new version of the reports page the other day, so go there and you can download the report and see what we're talking about. I have Dave Landry guest hosting for me again today, so I'm going to turn over the show to him now.
Thank you, David. I appreciate that. Thanks for having me back again, and thanks to Timing Research for once again having me back. Andrew, we got Andrew Keene of Keene in the Markets here. Andrew, tell me a little bit more about yourself, and tell me a little bit about Keene on the market, and then after the show we'll have some closing thoughts on that too.
Okay, I started trading at the Chicago Board Options Exchange in 2001. I was a market maker for over a decade. I was the largest independent Apple trader from 2006 to 2009. Currently, I trade predominantly equity options. There's 8,700 publicly traded companies. There's 4,199 with options in those. So I'm watching for quote-unquote unusual option activity in the marketplace. Like today, we saw a big buyer of XOM, ExxonMobil Feb 85 puts. I combined that with some chart analysis, and then I bought some puts today in Exxon. I've been short most of the oil names for a while now. I continue to be short the oil names, and I trade futures, forex, stocks, but predominantly equity options.
Okay, cool. Very interesting. Looks like that. I can't imagine how much what a great experience being on the floor must have been to your career, because that's a wonderful place to be. From what I'm told, you look to the left and look to the right, and if you're still there and everybody else is gone, you're doing the right thing, evidently. So, cool. Okay, next up we got Ed Carlson from Seattle Technical Advisor. Ed's a fellow member of the American Association of Professional Technical Analysts. With me, we belong to the same organization. Ed, tell us a little bit more about yourself, I should say, and then tell us a little bit about SeattleTechnicalAdvisors.com.
Oh, well, thanks, Dave, and good morning to everyone. Are you picking me up on the microphone?
Yeah, you sound great.
Okay. Yeah, Ed Carlson. My website is SeattleTechnicalAdvisors.com. I've written 3 books on the timing methods of George Lindsay, who was a guru back in the 1950s, 60s, and 70s that you've probably never heard of, but that's why I wrote the books. Old George wrote a newsletter for over 30 years but never put it all down into a book, so my books are a collection of what I've been able to find, mainly through the kindness of strangers. And that's mainly what my work is based upon at the website, Seattle TA.
That's very interesting, too. Next up, we have Roy Swanson of SteadyTrader.com. Roy, tell us a little bit about yourself and tell us a little bit about SteadyTrader.com. Looks like you guys do some quantitative work over there.
Yeah, I've been a trader myself since online trading started, and I've worked for about half a dozen firms in the business in terms of trading education, strategy, authors, and things like that. Last couple of years, I've been working on my own approach. It's at SteadyTrader.com, and I have a book on Kindle called "Read This First Before You Buy Stocks." It's about my overall philosophy for trading stocks. I'm a very straight-ahead stock trader, but I've been working on the last couple of years as a methodology that I call VST trading, which is very short-term trading, trying to fit in between what it would be called swing trading and the high-frequency guys. So basically 1 to 3 day holds, getting in, getting out, working the money hard while it's in, and using quantitative algorithms to scan and pick those stocks.
Cool, very interesting. I've been trading for over 20 years. I guess I've been doing this publicly since the internet has been out there. I believe that when it comes to markets, you can only predict the short term. It's like kind of a weather analogy. If it's cloudy and raining out, if it's cloudy and thundering outside, you know it's going to rain soon, or likely to rain soon, but you don't know if it's going to be raining this time next week or next year. I'm slotted as a swing trader, but I'll actually hold positions 4 years. In fact, Ed and I were talking right before the show. I showed him a setup that set up in 2012. It actually closed out last year. So short to intermediate term trader, I guess, would be the slot I go in. I have a 21-page report which explains the crux of my methodology. If you understand the report, you understand probably 95% of the methodology, and the rest is just details. So if you want that, just feel free, anybody watching today or on YouTube, shoot me an email at david@landry.com. Okay, let's go to question 2 here. Based on any technical...
I wanted to mention real fast, too, that I have
sorry.
the Q&A app activated for today, so if anyone watching has any questions, feel free to type those in, and we'll get to those at the end of the show.
Yeah, David, thanks for bringing that up, and feel free to ask questions, because every one of these shows, I know I learn a lot from. There's a lot of experience here today. We probably have, I don't know, 80 years of experience here if we add it all up. So yeah, please ask questions. So Andrew, we're going to go to you first, and the question is, based on any technical fundamental indicators you want to use, would you guess the S&P index will move higher or lower this week? And that's from now until Friday's close on the is that the 2nd? Is that correct? Now until Friday's close. Wow, this year's creeping up on us.
Yeah, if I look at it, the one thing I use for my technical analysis is Ichimoku Kinkin Hoi, which is a Japanese technical indicator. I wrote an ebook on it, and I had done workshops and boot camps on it. And it looks like the market's going to take out the highs. We do have a new all-time high. Possible reversal days happen when we have a new all-time high and close on the low of the day. So today is something that is very interesting. We have a doji candle on the daily chart. I think we do push higher into the end of the year, get the Santa Claus rally. January should be interesting because January, 75% of the time what we do in January do we do for the rest of the year. But technically, the S&P has been a buy in any pullback for the last 2.5 years.
Yeah, it has. And I've often wondered how to say that. How do you say that chart again?
Ichimoku Kinkin Hoi.
Ichimoku Kinkin Hoi. Okay, very good. All right, so we're gonna get an up from you, and based on that, let's go ahead and get your confidence rating. Rate your confidence in your answer to that question on a scale of 0 to 10, with 0 being no confidence and 10 being obviously extremely confident.
My answer would be a 6.5.
6.5. Okay. Okay, Ed, let's go to you. Based on any technical fundamental indicators you want to use, would you guess that the S&P will move higher or lower this week? And that is the close of Friday, January 2nd.
Well, I think I was in the same situation when we talked last. I've got Lindsay interval counts pointing to a high this week, anytime between last Friday and probably the end of the week. So if forced to make a decision, I'm going to say it'll end lower. But I'm going to give that a 5. What was your scale, 1 to 10? A 5.
Okay. Yeah.
I just feel comfortable saying that the window is open for this top. It'll be a tradable top, similar to what a year ago. Isn't that interesting? December 31st a year ago was an important high, but I think it'll be similar to that, and the July high, September high. So hope that answers the question.
All right. Yeah, it sure does. Okay, Roy, based on any technical or fundamental indicators you want to use, would you guess the S&P index will move higher or lower this week? And that's the close of January 2nd, Friday, January 2nd.
Yeah, I'm really confident that we're going to go up this week. And things have changed quite a bit this month. We're in a pattern. I use a proprietary list of 165 issues that I use for what I call overall market timing. I run my algorithm against it. And we're basically as strong as we were in November, which was a really good period. So I'm seeing this market just to continue to go up. I'd rate it at a 7.5 to 8.
Okay.
10.
All right. Okay, well, let me just nail you down on one. 7.5 or 8?
Let's do 7.5.
All right. Those 160 issues, did they change, or is it the fixed issues that you watch? How often do you change the makeup of those issues?
I really don't change it, so I use that as a baseline. I've developed it over some time, obviously, but then I just run this every week at the beginning of the week to basically, actually I run it every day, but I ran it last night, and I just use that as my overall sort of market timing, or whatever you want to call it, my market conditions indicator. So I've got
Gotcha.
I've got a long history on it, and like I say, it's mighty fine now. It's right where it was in November when the market just went up and up and up. So.
Cool. I have I call it the Landry 100, and it's I use it for internal use, but if somebody asks me for it, I make it public. And all I'm doing is keeping that as a momentum list. And that's the reason I was asking you about your list, because as a momentum list, what I've found is if it gets hit really hard, those momentum stocks go first, and then the overall market tends to follow. So I've picked up a few little timing characteristics from that, and that's why I was curious about how you were doing that. Okay, I'm going to say that we're going to end this week higher. As a trend guy, I'm not going to argue with new highs. I hate when a market drifts higher like it is, but this might just be that end-of-year drift you get, or that post-holiday or pre-holiday, depends on how you want to look at it. Obviously, we're off Thursday for New Year's Day this year. Not every year, but this year we're off. And I just don't think there's going to be a lot of people around trading for the rest of the week. So I think we're going to drift higher, and I'll give that a confidence of 8 on that. So up and 8. And just as a trend guy, I'm just not going to fight the tape in here. Okay. Now, let's go to question 1 here. What developing events, and they could be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P and other U.S. markets? Andrew, let's go to you first on that one.
I start every time. I would say the one thing I'm keeping an eye on is oil, actually. We just saw oil break through the all-time, whatever the 5-year low is right now, got down to 52.90. And there's 2 ways to look at oil. One is global growth demand, and another one is basically lower oil is good for consumer staples. But I think if oil continues to move lower this week, the S&P could roll over here. I think we're technically really overbought in the S&P 500 futures. We can stay overbought for a very long time, and I think we've been overbought for a while. But I think if oil starts to roll, breaks through $50, it's headed down to 35, which Goldman Sachs put a prediction on, and that will make the market a little frothy as well.
Yeah, it's one thing that came up in prior shows is that intermarket technical analysis. It only matters when it matters, and when you find those positive or negative correlations and they begin working, sometimes it pays to pay attention to them. So, good stuff. Okay, Ed. Based on what developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Oh, I'm not sure I've even got an answer for you, Dave. I'm kind of like everybody else. We're all just kind of sitting here. It's the end of the year. Not a lot of volume. I think you're right to assume this thing will just kind of slowly drift upward for most of this week. If it does break down, if we get a decent break, in the face of what's typically very bullish seasonality, I think that would be important. That would help confirm my Lindsay counts. I too have been following oil, like Andrew was speaking about, as a possible, because of what was once a strong correlation, but I think it's still going to be there. It's got to matter eventually. And I was a little shocked this morning when we talked about that, about how oil's breaking down again. That's about all I've got, I'm afraid. Not a good answer. Sorry.
No, that's a great answer, and I'm probably just going to dovetail on that. Let's see, who's up next? Roy. Roy, based on what developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P and other U.S. markets? And we're just looking from now until Friday's close on January 2nd.
Yeah, well, I think I'm going to echo the group. Low participation, basically the driving factors aren't going to have much of an impact. The one that I do watch with everyone else is oil. I run my algorithms against some of the oil ETFs, and I've made some great trades on them in the last few months. But I'm not anticipating any big news on oil this week or anything else, and it'll just drift up.
Yeah, I'm not a big fan of this holiday trading, and usually I tell people if unless you really, really like a setup, you're better off just passing on trading because it can be thin and choppy, and sometimes markets get jerked around a little bit for no good reason. I'm going to pretty much echo everyone here. I think we're going to have a little post-holiday drift, however you want to look at it, or pre-holiday drift, into the end of the week, and expecting a little quiet. I guess the only thing that scares me is the fact that we're all expecting quiet. I'm wondering if that's a microcosm of everyone else out there. That's the only thing that scares me is when we all agree on the markets. Okay, let's move to question 4. And Andrew, we're back to you. What's the most important trade? Let me slow down here. What are the most important trading-related lessons you have learned in 2014?
Looks like Andrew disappeared there for a second.
And you're closer to him. Can you reach him? Can you poke him?
I'm back.
All right,
Can you hear me?
all right,
Sorry about
back.
that.
Yeah. Okay, Andrew. What are the most important trading-related lessons you have learned in 2014?
Don't short the market. It's I've tried to play to the bear side a couple times, and fortunately it's worked for me in the oil names. But the market hasn't had a 10% correction, and we got to I think 9.7%, and then we found buyers. It's quite unbelievable that we do find buyers anytime the market sells off at all. So trend is your friend. So I try to stick with the trend. That's why you have to be long or flat. We're in a bull market. We've been in a bull market around for 2.5 years. There's only 3 ways to play a bull market: aggressively long, or flat. And trying to play to the short side, I think there'll be an opportunity to play to the short side. I eventually think we're going to have a major market correction, but that could be 3 to 5 years down the road.
Okay. All right, Ed, what are the most important trading-related lessons you have learned in 2014?
Well, probably the biggest lesson I've learned has to do with my Lindsay work, and I don't think most people are going to know what the heck I'm talking about. So I'll move on to the second most important lesson I've learned, and that is, at least for now, this market, we do get the pullbacks, corrections. They have been tradable, the ones I mentioned previously in the broadcast, but they're always V-shaped bottoms. That is just... I don't know. I seem to be unprepared in my own makeup for those kinds of bottoms, but I think I've learned that lesson finally. And until we get some sort of regime change in the market, that's what I'll go forward expecting. Okay.
That Lindsay work you talk about, are you going to publish that somewhere or as an add-on to your existing work?
Oh, yeah. As a matter of fact, I'm working on my 4th book, hopefully final, knock on wood. And I won't give an advertisement for it now. It's still, I spent all year working on this thing, and I foresee another year of work on it before it's going to be ready. But it's going to be everything all put together and everything documented for the entire history of the Dow.
Yeah, I'm working on my second and last book. So, okay, Roy, what are the most important trading related lessons you have learned in 2014?
Well, one is an old lesson, but it was reaffirmed this year, and that's turn off the news. Because,
Amen.
The media just every year, and I guess we all get sucked into it, it just gets more and more sensational, and they create these crises, basically out of nothing. I mean, where is the Ebola crisis right now? Where is the ISIS crisis right now?
Amen.
Come on. It's just to get eyeballs for advertisers, but these things do tend to affect market psychology and all that, and just really had to work hard, like everyone else, to keep my blinders on and just trust my algorithms and trust my quant. The second is that well, I guess there's 3 lessons. The second was don't listen to the bears because the bears are always out there.
Yeah.
But hey. Now, we did have pullbacks, and I made some progress this year. When I run my scans with my algorithms, I don't scan the whole market, and I've made some progress on scanning against different lists of issues depending on whether or not we're in a short-term bull or bear trend, because we have had some short-term pullbacks. And, that information is on my website. I don't need to go into it now. But, this whole idea of when the market is in a short-term up or short-term down, looking at different categories for your trades, categories of issues. So I'll leave it at that.
No, that's good stuff. I saw 2014 as the market just does what it always does. It does what it has to do to frustrate the most. You can't try to outsmart it. you have to wait for signals. I think one thing that 2014 did was I think it may have tricked a lot of people into believing that every time it's going to roll over, it's going to just go straight back up. So that wasn't a lesson for me. I just followed my signals as I wrote about today in my column, and then I think I will continue to follow those signals when I get a sell signal, because sooner or later it will roll over, and I think everybody is so used to it just going up, I think it's going to go up forever. And I noticed in one of the comments here it says the market is irrational but always right, and I think that was the case of 2014. And then the other thing is wait for signals. And who was mentioning it earlier? I think Ed was and Roy were talking about the bears out there, and it seems like every time the market would make a marginal new high, a whole bunch of new bears would rush in and tell you why that was the top. And the thing to do is just wait for signals. Like this last little rollover we had, it sure looked like I was going to get another sell signal, but by waiting for it, the market turned right back up and went back to new highs. So I know to wait for signals. I know not to anticipate them, but that was certainly a year and not to anticipate a signal on the downside especially. The only other thing I want to point out in 2014 is that we had bubbles. I saw Ed Sakota talk back in March, and he said to keep an eye out for bubbles in markets, and he thinks we'll have this reoccurring bubbles sort of theme based on, and his analogy is huge in the government and everything that's going on in this present day and age. And the bubbles that I saw in 2014 were IPOs were just phenomenal, and I don't know that bubble has burst just yet. So I'm going to ride that bubble as long as I can, and I'm long quite a few IPOs right now. So definitely keep an eye out for bubbles. Obviously, biotech was a big bubble in 2014, and we're still riding that one out too. So maybe look for more bubbles in 2015, and just make sure you have a chair for when the music stops. And the only last thing I want to just bring up real quick is that this market obviously won't go up forever. I think I've been saying this every week. As a trend guy, I hope it does go up forever. But just be ready. For those who just started trading in 2009, I think it's going to be a rude awakening when it does finally roll over. Okay, any comments or suggestions coming in while we're talking, David?
No questions so far.
Okay, fantastic. Okay, I think that's it. Andrew, do you want to wrap it up a little bit and tell us a little bit more about Keene in the market and how we can get in touch with you for more information?
Sure. The website is keeneonthemarket.com. Keene on the market.com, and the big thing we do is we run a live trading room where traders can individually self-directed watch me trade throughout the course of the day. We have 8 hours of audio and visual for 3 moderators talking about the stock market, stocks, trading. I'm not an investor, I'm a trader, so I could be in a position for an hour a day. I day trade, I swing trade. I'm a pretty active and aggressive trader, so just check out keeneonthemarket.com.
Okay. Ed, any closing thoughts from you or anything else you want to tell us about SeattleTechnicalAdvisors.com?
Oh, nothing earth-shattering. SeattleTechnicalAdvisors.com is the website. It's the only resource available for the methods of George Lindsay. Be glad to see anybody there. Glad to take any emails, comments, questions, and that can all be done through the website. Thanks, Dave.
Okay. Fantastic. Okay, Roy Swanson, any closing thoughts or anything else you want to tell us about SteadyTrader.com?
Well, yeah, if people want to learn more, it is SteadyTrader.com, and like the name says, we believe in being engaged in the market every day. If you really want to get good at it, my favorite quote is from Itzhak Perlman, the renowned violinist. He said, "If I don't practice for one day, I know it. If I don't practice for 2 days, the audience can hear it." And we just believe in, you don't have to trade every day, but, just be in there for an hour or so a day. And I've got a book and signal service on the website, and that's what we're about.
Amen. Do your homework. Absolutely. The only thing I'd like to say is I answer all my emails. David@DaveLandry.com is where you could email me there, or you could go to my website, like I said, DaveLandry.com. I do a weekly webinar, which is interactive. So if anybody's interested in that, you can see the countdown on my site, and I have a lot of free information on the site. So if you want to get started, like I said earlier, I got a 21-page report and a lot of good information for free there. All right, David. Once again, thanks for having me as the host. These shows are so much fun. I always learn something, and that's from a selfish standpoint. That's why I like you having me back as a host. So let me let you wrap things up, and I'll turn over to you now.
Okay. Yeah, thanks, guys. Great show. And thanks, Dave, for hosting again. So my host was Dave Landry of DaveLandry.com, and my guests today were Andrew Keene of KeenOnTheMarket.com, Ed Carlson of SeattleTechnicalAdvisors.com, Roy Swanson of SteadyTrader.com, and I want to remind everyone who's watching to be sure to fill out the survey each week. It's available at TimingResearch.com/current survey, and you can download all the past reports at TimingResearch.com/reports. So thank you for watching.
Thank you.